Indonesia is at a political and economic crossroads. I am joined on the line by Sarah Fowler from Oxford Economics to share her views. Sarah, Indonesia's president said this week he would issue an emergency decree aimed at restoring direct regional elections. Now, this means he will have to overcome serious opposition in the country's legislature. Now, how challenging will this be, and what are the major risks?
It will be quite challenging because the incoming new coalition remains dominated by parties that did vote for the bill to end the direct regional elections. So it will make it quite hard for it to be overturned. And there is a risk of inflaming political tensions a bit more, having a little bit more social unrest. The issue is that it might delay other key reforms. They really could do with things like cutting fuel subsidies so that they could spend more money on more productive areas, welfare, these kind of areas. And the more political tensions are inflamed, the slower those kind of important reforms are going to be.
Looking at Indonesia's trade relations, Indonesia and the Philippines are looking to double two-way trade to $12 billion amid opportunities in the seaweed, mining and palm oil industries. Italy is also hoping to open trade opportunities with Indonesian businesses. Sarah, what are Indonesia's main challenges when it comes to trade relations, and how successful do you expect these plans to be?
I think these plans will be successful. The outlook is pretty positive. The issue is that the expectations are that things will happen quickly, and there are some constraints that are likely to make things slower. The business environment, Indonesia is ranked quite globally compared to other major emergers for its business environment, which is a constraint that they do need to, things like labour relations, labour markets, and these kind of things they need to improve. Another constraint is the infrastructure. Indonesia has one of the longest coastlines in the world, but its transport links could be improved, and they need to bring in reforms over the next 10 years to improve their infrastructure to make it easier for other countries to trade with them. Another constraint would be the corruption. There's still quite a high incidence of corruption, particularly among former politicians under cases. So that's another constraint to trade. But it's one of the biggest countries in Asia, massive trade links with everyone. The competitiveness is very good, the wage costs, and the massive domestic market, there's a lot of positives there as well.
And finally, looking at investor sentiment, the Indonesian stock market has alternated between positive and negative finishes through the last 4 trading days since the end of the 3-day slide, in which it had tumbled 1.1%. Sarah, do you have a bearish or actually a more bullish outlook for Indonesia's stock market, and how do you expect the country's currency to perform?
Our outlook for the stock market is quite positive. We expect, although the currency has weakened in recent weeks on concerns about growth in China, we're quite positive, expecting the currency to be quite stable going forward. The trade deficit has improved markedly this year, and that should help the currency be more stable going forward. Indonesia, the stock market also has quite a lot of catch-up potential. It's still fairly small relative to other major emergers. And as the new president and the new regime brings in more reforms, sentiment should be quite positive towards Indonesia and trading and investing in Indonesia.
Sarah, thank you very much for your time today, and I hope to speak to you sometime in the near future. Well, viewers, do stay tuned as we have plenty more coming up on Dukascopy TV. Goodbye for now.